Okay, so let's talk a little bit about the macro backdrop and why you think that this might be the time for to potentially hedge some of your interest rate risk. Like, we've gone through 4 decades of interest rates headed lower and lower and lower. I personally think that that COVID brought about a fundamental change, and there was a change from monetary dominance to fiscal dominance, and that we're about to see a lot more inflation going forward. I'm wondering if you feel the same, and that is one of the reasons that you brought out this product.
Um, COVID accelerated part of my, base concept of what's going on. Do I think rates are going up? Yes. Are they going up tomorrow? No. I think they're going to go up in the next 2 to 3 years. And the reason why is I believe that demographics is the key, not sole or primary or key, but significant driver of interest rates and inflation. And once again, if you go into some of my past commentaries, I have some really nifty charts showing the relationship of the labor force growth rate relative to interest rates. And the reason why, and if you look at the big bulge of rates and inflation in the late 70s, early 80s, this, in my view, was caused by the baby boom generation all of a sudden hitting age 30, 35, getting married, forming households, having a baby, buying a car, buying two cars, buying a house, buying a bed and a washing machine. They're buying, when they form a household and they merge their assets, they all of a sudden start to spend more to build this house out. And they're buying these assets from who? The generation behind them. Well, in this case, it was the World War II generation that was depleted for reasons can kind of guess about. If you follow this labor force growth rate of boomers entering the workforce, it went up and has gone down steadily for the next 40 years. But now, what's going to happen 2, 3 years from now? Demographics is baked in the cake. You can't go back in time. We know how many kids have been born. We know what age they will be in 5 years. And what you're seeing happening right now is the millennials, a little bit behind the boomers because they get married later and have kids later, are starting to turn 30. They're going to start to get married. They're going to enter the workforce, and they're going to go and start to buy things. Where are they buying them from? They're buying from boomers. What are boomers doing? We're retiring. We're going to make less goods. And so you have this inflection point coming up over time right now, and where you're going to see the boomers leaving the workforce exceeded by the millennials coming into the workforce. That inflection point starts in 2023, and that's my story.
That's
And that's
short.
why I want a 7-year option,
I
because
get
the
it.
7-year option expiring in 2028 gives me optionality right into the meat of this thing, and I'm buying it now while rates are still very low and volatility is very low. And the plan is I'm not timing the market. I'm going to buy it now because the opportunity is here, and I'm going to sit on for 2 years until it happens to me.